A fresh rate hike and foxy deals are happening here on Wall Street, and joining me, of course, to chat it up is none other than Matt Cheslock from Virtu Financial. Hey, Matt, how's it going?
Good, boss. How are you?
I'm well, thank you. Well, let's take a look. Disney is acquiring Fox for $52 billion. Is this a good thing, or is it a Mickey Mouse deal?
I would imagine it's probably a good thing. The market's reacted to this already, so this is kind of, we expected this. This was well telegraphed. Hopefully it passes muster with, the administration in Washington. That would be the biggest concern, but, right now it seems like the market's digested pretty much all of it.
The Trump administration did also take over the FCC, if you really think about it. They're going to vote on net neutrality today. How could this impact the broader market? Because startup companies like Etsy, they did voice some concerns about this.
Well, that's interesting. What we've seen right now is there's been a lot of opposition to what the government has said. So, there are going to be a lot of people that are going to be concerned about them taking control. We were hoping for less regulation and things like that. So I think that's the important thing to look at it. If we get less regulation, that will be a good thing.
All right, cool. Now, Matt, we're going to be finishing up the week with a quad witch, for those that want to sound pretty cool, and a lot of rebalances. Now, when I was researching rebalances, not a lot comes up on the internet. So let's do it old school way. Let's do it. What are rebalances? Why did they do that? And why should we care?
So a rebalance takes care, it's maybe twice a year, maybe 4 times a year. It's an opportunity or a liquidity event for a portfolio manager to adjust their portfolio. So they look at certain metrics, and if a company doesn't meet that metric, it will come out, they'll add new ones in. So the companies that are come out, they'll be stock for sale, and that usually happens, maybe 2 or 3 weeks before the event, and then the final event takes place when they use that liquidity event to finish out the portfolio adjustment. So it's a constant way to keep portfolios up to date with what the market has.
Okay, cool. And we do know what stocks will be going out of those portfolios ahead of the action, right?
Yeah, there's so many models now that take place, and you kind of can forecast it maybe a month or so out. So then that's when the trading takes place. In the years past, this was a one-day event. So these numbers were market moving, they were huge, and there was a ton of volatility that was associated with it. Now these models hopefully eliminate a lot of that volatility, but it still doesn't mean that the stock won't see some kind of movement throughout a month.
Okay, so you're expecting some kind of excess volume tomorrow, extra volume?
Yeah, with a quadruple witch, you'll see it anyway. It's end of the year. It'll be the last real trading day of the year, because then we start getting into the holidays. So there's a lot going on tomorrow. It's kind of exciting. We're looking forward to finishing out a strong year.
Awesome, and we're going to finish out a strong week, hopefully, Matt. Always nice to see you. Thank you so much.
Absolutely. It's good to see you.